Welcome to another episode of Trends and Ideas. I'm your host, Brian Egley. Americans love to spend money on their pets, and studies show this spending holds up even during challenging economic times. What does this mean for investors? Joining me to discuss this is S&P Capital IQ equity analyst Michael Sowers. Thanks for being here, Mike.
Thanks for having me, Brian.
Mike, let's talk numbers. What are the latest studies showing as far as pet ownership and spending here in the United States?
Okay, well, the American Pet Products Association has been conducting surveys since 1988, trying to calculate the ownership levels in the U.S. So pet ownership has risen from 56% in 1988 to 68% in 2012. So a nice, slow, steady, gradual increase of pet ownership across the country. And in terms of spending, what that's really meant is that over the past 10 years, spending on pets has grown at an average annual compound rate of 6.1%, which is significantly higher than retail in general. And I'd like to add that during the 2008-2009 recession, when retail spending kind of fell off a cliff, spending on pets was actually up approximately 5% during both those years. So it's really held up well during all times.
Interesting. So what does this mean for business?
So, the pet supply retailing industry is probably my favorite sub-industry across all specialty retail. I think broadly speaking, we're looking at retail spending of about 3 to 4% over the next year and a half. For pet spending, we're looking at 4 to 5% growth, so modestly higher than retail in general. Also, as I mentioned before, it's a very defensive, non-cyclical industry. So, if the government shutdown leads to, declining consumer confidence or contraction in retail spending, spending on pets should hold up relatively well. And, it should do well if spending remains kind of undeterred and there's no real impact from the government shutdown.
Interesting. Do you have an investment recommendation you can share with us today?
I do. I really like PetSmart, which is ticker symbol PETM. PetSmart competes with numerous other retailers, mass merchants, grocery stores, online retailers. They price their products competitively with these retailers, but what really sets them apart are their services offerings. So PetSmart offers training and grooming in all their stores. They have doggy day camp and overnight boarding services in a number of their stores, and they offer full-service veterinary hospitals in approximately 2/3 of their stores. So all of these services really, breed about a strong amount of loyalty from consumers and drive repeat business. So that's a really, strong positive, and sets PetSmart away from their peers. In terms of valuation, PetSmart's trading at just over 16 times my next year's EPS estimate of $4.60. That is a slight premium to the S&P 500, but also a slight discount to the S&P Consumer Discretionary Sector average. And if you look at it in terms of P to growth, PetSmart trades at about 1.1 times, which is a slight discount to the S&P 500.
Thanks, Mike. For more of Mike's views on pet supply retailing and investing, we encourage our MarketScope.com subscribers to read a related Trends and Ideas story on MarketScope Advisor. It's called Fetching Profits from Dog and Other Pet Owners. Until next time, thanks for watching or listening. I'm Brian Egley for S&P Capital IQ.